JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 24th of May 2022. So welcome everyone, welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute an investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFDbrokers.com website, and specifically the page, the market news and analysis page here, which I believe you can find it useful. So yeah, check us out there on JFDbrokers.com and click on Start Learning, and then yep, market news and analysis. I believe you can find some useful information here, guys. Now, jumping into the charts, let's see what's happening here on the technical side of everything. And yeah, with the first thing I can say that we have stalled and we struggled to overcome this current highest point of May, which is around that 27,072 territory, approximately around here. So far, it continues to do its job and provide resistance. Now, yesterday the U.S. market closed in positive territory. Closed in positive territory together with the European ones. However, once the market was closed, the U.S. futures declined heavily, and probably this is where the Nikkei and Shanghai Composite also picked up and also drifted to the downside. On the slightly positive note here, the fact that we managed to remain above this downside line on Nikkei here, this downside line is taken from the high of the 30th of March. That of course gives still a bit of hope for something like this. So if we rebound from it, then yeah, we could go maybe for that upside, for that 27,072 territory, and maybe even break it. So yeah, let's continue monitoring that. Again, also the positive note, the positive sign here as well is that we remain above that 21-day EMA. But if we start falling below this downside line, below that 21-day EMA, and we stay there, well, I mean, that's maybe where we could consider a bit of a retracement. The only thing there, I would say, this is in order to complicate everybody's life, I'll draw another upside line here, which could be just something of a gauge. In other words, you could still keep an eye on this 26,438 level, which, as you can see, acted as a very nice area of support and resistance, and then support again. So a nice good drop below it may open the door towards a bit of a move to the downside. However, at the moment, yes, I'm keeping an eye on this downside line. So let's see if we can actually trampoline from it. Shanghai Composite also declined. Yes, I mean the kind of the weak, it was felt here in Shanghai as well. So we declined, but there is still hope that we could see a bit of a retracement of some sort, maybe rebounding from this upside line, taking from the low, the 27th of April. So if we can see something like that, then yeah, we'll go for the upside. But to be honest, at this point, I rather stick to this barrier, the 3,160 zone, in order to go for some higher levels. So a nice good pop above it may attract more buyers into the game, guys. Now the German index, DAX. So yesterday, as I said, closed nicely in positive territory. However, I think let me just quickly check the cash index. So, however, we saw a bit of a decline after that, and that's understandable because, like I said, the U.S. Futures did decline, and looking at the German index right now, it's cash index. We can see that it's currently trading at around 14,050 level. So that means that we are still above that psychological 14,000 mark, and we're also slightly above this downside line. Now, to be honest, I am going to probably get rid of this downside line now because we have violated it a few times, and it didn't really, act as anything here recently. So probably it's time to get rid of it, and mainly for the upside, mainly focus on some of these barriers instead. So, for example, you can see that yesterday we had a hold up below that 14,226 territory right here, and we kind of got a hold up here, and we drifted back down. We're still above that 21-day EMA, so we're stuck in this little territory right here. So, in other words, this is not really something that's very, very attractive for us for now. If we want to go for some higher levels, well, first of all, wait for at least a push above that 14,226 territory, and then we can, if we clear that, and our next target is the 14,315. But if that is not able to kind of provide good resistance, then a nice good break here could open the door towards much higher levels. At the moment, like I said, there is still hope here for the bulls because we are still above this 21-day EMA. Now, even if we drop, for example, below that 21-day EMA, below that 14,000 mark, now this is where I'm going to say maybe something like this could still be possible, but of course we will aim for the downside initially, that's for sure. We'll aim for this upside line, but if this upside line gets broken, then of course, this is not really looking well here for the for those buyers, basically. So in other words, let's see what's going to happen here, and let me just up. There we go. So let's see what's going to happen here with this 14,000 mark, if it's going to hold or not. If it continues to hold, yes, nice rebound maybe could be possible, but still for the upside, I would prefer to wait for a push above that 14,226 territory at least. Now jumping into the S&P 500. So as you can see here, yes, it did have a nice a kind of push higher. This is what I talked about, if you remember, guys. Last week on Monday as well, I talked about the US indices, and I said that, well, basically, we could see that larger correction to the upside towards this downside line, for example, taken from the high of the 21st of April. But if it holds, another decline could be possible. Now, currently, we're seeing that decline. The cash index is sitting at around 3,925 territory, so it's basically drifting back down. Now, a few adjustments have to be made here, and we'll probably, this is the level that I want to watch. So this 3,945.46 level, actually, marked by the inside swing highs here of 19th and 20th of May. If we somehow continue to trade below it, because we're currently below it on the cash index, if we continue to trade below it, then I'll aim for this 3,853 territory. If we kind of climb back above this 3,946 zone, then maybe the index would be preparing maybe for something like a break of this downside line or something like that. So we'll consider that idea. But again, for now, like I said, I'm keeping an eye on that 3,946 territory. I can see in the chat room here, good morning to you too. Good morning to everybody else as well who's joining in. So I hope everybody's having a wonderful start of Tuesday. Now, jumping into NASDAQ very quickly, NASDAQ 100 here. The index, closed in positive territory, nicely rebounded, but but as you can see here, this little obstacle, this 12,066 territory somehow did its job and provided a good hold up. Of course, the cash index right now is on a bit of a decline, together with the rest of those, yeah, the cash index is currently sitting at around 11,812 territory. So basically, we are still below this below this 12,066 territory, and well, most importantly, we're actually below the psychological 12,000 mark. So that means that, well, I mean, this of course could lead to some lower levels. And the fact that we are testing this area, the highlighted territory here, I talked about this, and I said that if we drop below this, then yeah, there is a good chance for this one to move lower. But yep, I would say it's a very interesting moment right now, guys. Like I said, if it somehow continues to trade below this highlighted territory, which is roughly between the 11,817 and 11,846 levels, so if we stay somewhere below here, then there is a chance to see maybe actually this one declining further towards that 11,692 or this 11,512 territory, which is, by the way, not the lowest point, not the current lowest point of May, but let me just scroll back here. It's this one right here, the low of the the 10th of November of 2020. So this is where we kind of found strong support last week. So in other words, for now, yes, it is quite interesting. If by any chance it climbs back above this 11,046 territory, we might see this one kind of, you know, ranging for a little bit, maybe moving sideways here, and then kind of, and then we'll just have to wait for that nice good exit. At the moment, just observing this one, but as I said, if it stays below this highlighted territory today, then yeah, further declines are quite possible. DXY, the dollar index, so yeah, it broke nicely this upside line, this some of these other hurdles, and if you remember, I talked about this. I said that if we drop below this 102.65 territory, the next target for me is this 102.35, which we managed to reach perfectly, and actually we managed to also overcome it. So now we're seeing a bit of a retracement, and this 102.35 level is acting as a perfect area of resistance. So if it continues to do so, then certainly, yeah, we will continue aiming lower, and my next target here is this 101 zone, approximately around here, which could be not far from this upside line taken from the low of the 10th of February. In general, as you probably understand, this whole move could still be seen as a temporary correction before another possible leg of buying, because this could be seen as that little well, not little, but this part of the larger correction. But again, maybe the bulls, you know, will pick up somewhere near this upside line. But again, let's not rush into anything, because if, for example, this suddenly reverses sharply and pushes, actually, let me remove this upside line, no longer needed. If it climbs back above that 21-day EMA, then maybe this is where we could start, you know, considering a bit of a nice move to the upside. And another thing, of course, just in case, keep your eyes on this little short-term downside line. So as you can see, this break of this 21-day EMA could come in perfectly with a break of this downside line, taken from the high of the 13th of May. Now jumping into gold very quickly here, you can see that well, so far this barrier is doing its job. This 1858 level is doing its job. It's providing a good hold up, good resistance. That's together with the 200-day EMA, of course, and I would say maybe the 21-day EMA is there as well, but to be honest, no, it's more of the 200 EMA that's doing his job and providing resistance. So now then, in order to go for the upside, certainly yes, a push through this barrier is required. If we're looking for some lower levels, I would say at least wait for a drop below this 1836 territory. At the moment, yes, we are leaning a little bit more towards the upside because we are still trading above this upside line here, taken from the low of the 9th of August. But again, it could, turn around very quickly. Let's say, for example, if by any chance the DXY picks up the pace and rises, then yes, we could see gold declining, to the declining here and moving lower. So, in other words, what you can do here as well, probably to a little bit complicate your life, is keep your eyes on this little upside line. So this could be that little gauge. So basically, we could see a decline, for example, and if it stalls somewhere near this upside line and then starts rebounding, then yep, it will work out perfectly in that case. But still, either way, guys, if you are still looking for those higher levels, a push above this 1858 level could be just that, maybe a little more safer option. Let's put it this way. US oil, WTI oil. So declining again. This barrier. Look at this. The 111.77 did its job, provided a good hold up. I talked about this level for a few videos back, and yesterday, of course, as well. So I said that in order to go for some higher levels, I need to see the price staying above that 111.77. Now we're seeing a bit of a decline, and in a way this 21-day EMA could be tested. Can we see that? Well, yeah, of course, as long as we remain below that 111.77. And if then I'm going to keep an eye on this little area here. Actually, I think it's time to, yeah, I think this is the 106.48. This is where I used to look at previously, but I think this could be a better option here. Yeah, the 107.27, because it coincides nicely here with the 21-day EMA, and also acted as a inside swing low here of the 6th of May and the near the high of the 12th of May. So yeah, good potential target. So this is where I'm going to adjust this level here for the downside, and I'm going to keep an eye on this 107.27. In case it drops below it, then yeah, at the same time we will drop below that 21-day EMA. Now jumping into Ethereum very quickly, guys. So Ethereum, to be honest, not much is happening. We are still kind of ranging here, I would say, or maybe even coiling up, but to be honest, it's way too tight here. So that's why for the downside, I will keep this 1906 territory as a gauge for myself. So if a nice good drop below it may attract more sellers into the game. A push above this 2160 territory could do the trick for a few more buyers towards this downside line. AUD and ZD, so continues to do what I was hoping it's going to do. So it's rebounding from this upside line for now. It isn't trying to climb back above that 21-day EMA. It's currently sitting above it, slightly above it, but again, don't get me wrong, I mean, this could easily change everything, but I would say this way: as long as it stays in between these two lines, then two trend lines, I'm just observing it. If it starts breaking this upside line and falls below the 1.0978 territory right here, now that's where it could become a little bit more interesting for a few more sellers, guys, so keep an eye on that one. Quick update on USD Jpy. So yesterday I talked about this idea of a possible falling wedge pattern, which according to all the TA rules tends to break to the upside, but as long as the rate remains inside that pattern, it could continue drifting lower. So what you can do here is, for example, keep your eyes on this 127.52 territory, which somehow continues to do its job and provide excuse me, support. So yeah, we get these false breakout, but that's fine. We don't really get the rate staying above it. So in other words, a drop below this, yep, may attract more sellers. Yeah, we could see this one drifting lower, but if it manages to stay below this hurdle, then yeah, we could go lower. We could aim for this lower side of the potential falling wedge pattern, and then we'll just take it from there. However, if we push through this upper side of it and also climb above that 21-day EMA, that's where it could become very interesting for some buyers here. USD CHF so continues to well, first of all, let's put it this way: we managed to reach the upside line here, taken from the low of the 31st of March. So kind of, I would say, mission accomplished, because previously, you know, I was talking about this level here, the 0.9873. I said that if this gets broken, this could lead to the 21-day EMA, maybe even towards this upside line. So yep, we kind of reached that. So that was a good move lower here. Now what's next? Of course, if you're looking for some further declines, then well, I'm keeping an eye on this 0.9650 territory together with this upside line taken from the low of the 31st of March. The reason why I'm talking about this level here, and let me just go back in here. This is the high. I think it's even the highest point. Yeah. Yeah, that's correct. The highest point of June of 2020, guys. So this is where we're currently resting. If we can, you know, drop below it and break this upside line, then yep, lower levels could be met here. For now, we're seeing a bit of a rebound. Not saying that, you know, we should exclude the upside, but yeah, I would say if you're, you know, if you want to be a little bit more on the careful side, probably we could stick to this little hurdle here, this 0.9764 area, approximately around here, marked by the high of the 20th of May, and at the same time, a nice good pop above it may break this 21-day EMA. So let's see how this is going to play out. GBP Aussie, very quickly on this one. I'm still watching this one, and look at this beautiful, guys, trading activity. So last week I picked up on this already, and I told you about this last week. Yesterday I said that well, we were drifting lower, but as long as it stays in this pattern, I mean, it could, you know, move sideways here a little bit. It will continue coiling up. Because we're excuse me, because we are in this nice little pennant formation, because we have our pole, and this could be a bullish, could be seen as a bullish pennant, which of course, yeah, could break to the upside here. However, until we get that break, we cannot really get excited with, you know, with that scenario. But of course, it seems like it could be leading that way. But yeah, let's say, guys, yeah, everything can happen. It could still, you know, continue moving, you know, coiling up here, moving up and down, and until it will decide what to do further. So yeah, it's going to be quite an interesting one to watch, I would say. So we do have some data coming out from UK today with the manufacturing and the services PMIs, but the preliminary numbers. So maybe, you know, that could give something if those come out nice. Maybe those could give a boost. However, again, maybe something else, maybe a huge decline in Aussie could trigger this as well. So yeah, keep that in mind. Let's see how this is going to play out for now. But as I said, keeping an eye on these sides of the pennant. I want to see which way this is going to get break out to. Euro JPY. So I talked about this one as well. I said that keep your eyes on these two trend lines, because as long as it remains inside this, I'm gonna just continue, you know, observing the price, the action here. So if you're, you know, if we actually break the downside line, yes, this could attract more buyers. But for the downside, if we break this upside line, maybe this could lead, you know, to some lower levels here. So to be honest, pretty straightforward here. I'm just, like I said, for now, I'm just observing this one, but it could present itself with a nice opportunity later on. And finally, EURUSD. So beautiful move here to the upside, and there we go. Okay, this is quite good. This is quite interesting. So we pushed through this 1.0636 territory. We managed to stay above it. Now we're seeing a bit of a retracement. I think I just shifted this level, so do apologize, guys. I think, yeah, this needs to go back to its place. There we go. So yeah, we managed to push through that barrier, and We're seeing a bit of a retracement, which is fine, it's even if it retraces back all the way to this hurdle, if it continues to provide support, then yes, a nice rebound here could be possible, and we could go for some higher levels. Now, if you're a little bit more on the careful side, what you can do here is keep your eyes on this 1.0697 territory, or roughly around that 1.007 zone. So a nice good push through that may attract more buyers straight away, because a forthcoming higher high would be confirmed, and more of those buyers could join in. So yeah, so this could be quite an interesting move as well. So this is a little bit more a careful approach, I would say. Now, if we drop below this 1.0636 territory, I will take a bit of a maybe even actually a neutral stand, because, well, overall, of course, we would still be above this upside line taken from the low, the 13th of May. Now, this is a bit of a tentative line. It's only 2 touches here, but maybe there could be a rebound here. However, if we do fall back below this 1.0636, I will be, we'll be very careful, because this, this might decline again. So maybe this is where the 1.07 level starts to, pick up attractiveness. So yeah, that could be that little safer option, I would say. For the downside, well, a drift all the way back below the 1.0495 level right here maybe could do the trick. But again, I want to see I want to see how this is going to play out. First of all, we're going to get rid of this downside line. But now I want to see how this, let's say, how this upside line would play out. Maybe actually we could, already start looking at some lower levels earlier, but we would need to see the pair moving towards that upside line. For now, I'm cautiously bullish on this one, but yeah, and then these are the levels that I'm keeping an eye on for today. So that's it, guys. That's it for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time spending with me. If you want to catch me tomorrow morning, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful, wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So, thank you very much, and bye-bye.